FHA and VA loan assumptions. Here's the deal. When mortgage rates increase, anybody that may currently have an FHA or a VA loan and might be thinking about selling their home may want to consider selling the mortgage with their house, meaning that lower interest rate than what the current market is. Now here's the catch, and I'm getting a ton of calls, so I know everybody out there is thinking about this, but there's a few things you have to know. So first, remember, with FHA, if the person is going to assume the loan, they still have to meet FHA's criteria, meaning that they have to qualify for the assumption. But if they do, then they could technically assume that lower interest rate. Now with VA, it's a little more complex, and there's all kinds of information out there on the media. Here's the deal. You don't necessarily have to be a veteran to assume a VA loan. However, whether you're a veteran or not, you do have to qualify to assume the loan. But here's the catch. If you are not a veteran assuming a VA loan, the veteran's eligibility, i.e. the seller's VA eligibility, will be encumbered. It will limit their future use of their VA home loan benefits based on that eligibility. So what we see is most sellers that do have a VA home loan, when they're looking to find a buyer that can assume that VA home loan, ideally you would want that buyer to be a veteran or have VA home loan benefits. That way the eligibility can move over to the buyer and the borrower, the person assuming the VA loan, and it frees up the seller's VA home loan benefits. So do you have to be a veteran to assume a VA home loan? You don't, but the seller then has to know that their eligibility, their VA home loan eligibility, is going to be encumbered until that loan is paid off or refinanced. And also, very important, if the buyer that's assuming the VA loan is not a veteran and they default on the mortgage, it does go against the seller's VA home loan eligibility forever. So really important to kind of know how this thing works. Now, although VA assumptions and FHA assumptions sound really good, maybe you have a 2.25% interest rate right now and you're getting ready to sell, and maybe you have a VA home loan. Let's walk through the math, because this is really the catch too. One, let's say that the current loan balance is $300,000. Well, based on the appreciation that we've seen in this market alone, but nationwide over the last 2 years, let's say that the current list price of that house is $600,000. Well, when you're assuming an FHA or a VA loan, you're assuming the current loan balance, which means now in that scenario, you've got to come up with $300,000. So that's the limitation. That's the holdback. That's why we don't see a ton of assumptions. Now, if you are in a position to be able to assume a VA home loan and you can put down in that scenario the other $300,000, great, go for it. But FHA, it's a little bit different. So FHA, let's walk through that again. Let's say it's a $600,000 purchase price. Let's say the loan balance that you would be assuming at 2.25% interest rate is $300,000. Yes, you would have to come into closing with that additional $300,000, but also with FHA, remember, you're going to assume the mortgage insurance. So it may negate truly the benefit of an assumption on FHA, because you're having to qualify, and even though you have a great low interest rate, with FHA, it's very likely that that loan has mortgage insurance on it, which means that you're increasing your overall APR. And if you're putting $300,000 down on a house, why would you use an FHA loan unless you couldn't qualify for a conventional loan? So these are just some of the things that we have to keep in mind when we hear all the pizzazz out there and we see in listings, you know, assume a VA 2.25% interest rate home loan. Yes, it can be done, but from a seller perspective, they have to understand the pros and cons. And from the buyer's perspective, it's just important to know you're probably coming to closing with cash.